It's TFNN, The Trader's Edge, with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the October 29th wonderful Wednesday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes, and I believe we should be pioneers of our future, never prisoners of our past. So let's do everything in our power today to be pioneers. And as we begin our day, let us always remember that our greatest success is not in never falling, but instead in rising every single time we fall. Let's go check out these markets. I wonder if they're ever going to fall. Hey, you can give me a call at 877-927-6648. Internationally, 727-445-1044. Together, you and I, we can help the Tiger Nation out there. This is wonderful Wednesday. Of course, it's the anniversary of the 1929 crash out there. So let's say happy anniversary to that. Kind of ironic that we've got the Fed ending QE today on that anniversary date out there. I know that there are some that are calling for a crash out there. I can't tell you whether that's the case or not. But what I can tell you is what the markets are doing. So give me a call at 877-927-6648. Again, this is Wonderful Wednesday. Of course, it's Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we got Dow Futures. They're trading up about 20 points, trading out at 16.955. Kind of ironic of all the futures contracts out there. It's the Dow Futures that actually have given the largest potential sell-ish type signal. I do say sell-ish, meaning that it may have made a, I've got to go back and take a look at it. It's possible it's going to take a, it hasn't taken out that high just yet out here, but we'll take a look at that. So you've got Dow Futures up about 21 right now. S&P is flat off, let's just simply flat. NASDAQ off a couple of points last night. Pretty amazing how we had that rocket ship in the market yesterday. And then, of course, at about 6:30 or so, the rocket ship that just simply crumbled as it was trying to make its way up to the space station out there. That's too bad. That is unfortunate. If we take a look at the currency market out here, euro is kind of flat, U.S. dollar is kind of flat. You kind of expect that with the Fed coming out here this afternoon, 2:30-ish is the time frame. You kind of expect that the markets ought to be relatively quiet between now and then. If we take a look at the metals market, gold is back $7. We'll look at that. Silver's off a nickel, no big deal. Light sweet crude up 75 cents right now. She's trading out at 82.18. A quick peek across the globe out here. We take a look and see what's going on over in Europe right now. You've got the DAX is up 62 points, 0.7%. The FTSE is up 1 full percentage point or close to it, up 57 points out there. Sea of Green, of course, we handed the ball off pretty well last night to Asia. The Nikkei up 224, 1.5%. 1.25% inside the Hang Seng. That was 300 points. And then 1.5%. The Shanghai was on fire the night before, I believe. And then last night up another 1.5%. I think it was up about 3 or 4% the prior day. In fact, if we take a quick peek here at the Shanghai, and see what it is doing. Remember in Shanghai, it had a little bit of a market sell-off. That was mostly due, I don't know if it was mostly due to the unrest that they had over there. I haven't heard much about it, although I think they were setting up kind of like a camping-type city out there. Anyway, what the Shanghai is doing, it really looks like the NASDAQ or the Qs at this stage. It's back inside its swing point high. In this case here, the Qs are September 19th. Inside of the Shanghai, it's the October 9th swing point, the high of which is 2503.51. You didn't test it. You did close inside. It would suggest that it would test that level. And it looks like it has moved up into that area with some volume. So some accelerated volume as it's coming into a swing point. That could set up a very large A to B equals CD to the upside out there. Let's take a quick peek. I haven't looked at the DAX or the FTSE lately. Let's go take a look at the DAX, actually see what it is doing out here. So the DAX, as we speak right now, let's take a look at retracements. It almost looks a little bit more like the Russell 2000, except for that explosive move. You talk about rocket ships. Well, most certainly the, I did mean the Hong Kong. I don't know, what did I say out there? My apologies if I didn't say Hong Kong out there. But, it was the Hong Kong protests. In any event, let's take a look here at the DAX. You know, I got that problem. I say thinking one thing and saying something else out there. So I do appreciate all my wing man and wing women out there that help to keep me on track here. Keeping on track inside of the DAX, it's right about the 50% retracement of its move down. It's moved down from the September 19th level down to the low on October the 16th. So what we do know about the markets here is the DAX is most certainly an underperformer. If we use that as a correlation to the U.S. market, right? You know, if you take a look at the DAX, if we're going to correlate it to the NASDAQ, I'd say there's no correlation from the standpoint of strength. Because you got the NASDAQ at its highs, and you most certainly don't have the DAX anywhere near its highs out there. What does that mean? Hey, if the market's going to fall off the planet here, maybe look towards the DAX as a shorting vehicle, because it's not in the Russell 2000. Russell 2000, we go take a look at that IWM here from yesterday, talk about little rocket ships out here. Where is that IWM? Let's go take a look at that jet propulsion tank out there. About 3% to the upside with what? With volume, major volume inside of it. How come my volume is gone from this chart here? We need to add that back, most certainly. Let's put the volume. Let's go put the TAS boxes on there. Let's get rid of that. Let's put a couple moving averages. Let's decorate the chart out here. Let's put our divergence. There we go. Now we've got our normal tools that we take a look at. Now, of course, I got a 120-minute chart. I didn't really mean to do that. I meant to put up the daily chart. Boy, it looks like I wasn't prepared this morning. Now, take a look at this here. Let's pull this off to the side. There. Now, as you know, if you've been listening to the show, number one, I called for a major market bottom. Well, that's in. So those lows from October 15th, that's in, that's done, 15th and 16th. The major market bottom is absolutely in. If we take a look at what I've also said is inside a bullish market, so this is a new trend. This is another leg up in the market. Well, we're not really there yet, but we're going to. The market is going to get there. That doesn't mean that today it doesn't react violently to Janet Yellen and the word, you know, whatever the words, however they want to parse it. And that is really a possibility out there. But until the lows get taken out, which I don't believe that they will get taken out. But until those lows get taken out, what we've got is a market that's got a new huge upthrust. Now, the real sign of a bullish leg in the market, the IWM doesn't have to, you know, this is going to be that Russell 2000, and it's going to be the NASDAQ. And what do we know about the Russell 2000 and the NASDAQ as we take a look at yesterday's action? Well, number one, let's get rid of this retracement level because that most certainly did not happen. And if we take a look at yesterday's candle, big, wide-ranging bar, accelerating volume out there, accelerating volume. Not only that, broke its channel line. If we go take a look at a... you know, what channel? If we just take a look at this current channel out here, let's just put that on my screen. If we take a look at this channel right there, let's set that up as the channel line because that really is the short-term channel line out here. And there, excuse me, is the bottom. I can just go ahead and move this back up here towards the top like that. Broke through the channel with conviction. I mean, conviction. Doesn't get much better than that out there. So you got the Russell 2000 basically jumped in the elite. If we're taking a look at the race around the track out here, even though it's not up at its highs, the Qs are, right? Qs are up there. Light volume, not that much, you know, a big deal out there. Likely making a 100% move of a move. Maybe we see a bit of a retracement, a pullback out there. But those are the pullbacks. You know, people talk about, you know, the mentality of folks buying the dips out there. Look, if we do get a dip, it's one that you want to buy out here. It absolutely is one that you want to buy. Now, maybe we get fortunate in that the Russell 2000, when you break a channel line, what you really like to see is price come back, test that channel, make sure that it's a confirmed breakout. If it gets back inside the channel, it says, uh-oh, out here. So that would require a 3% drop inside the IWM. And look, anything can happen out here. But what the Russell 2000 did, as I discussed yesterday, and then we got the confirmation, you know, going into the close here, the Russell 2000 has taken over the leadership role with regard to its moves. This guy had the largest percentage moves here off of the bottom, and yesterday was just one more example of it. And inside the Qs, if we take a quick peek at the Qs, look, the Qs are giving us a signal that maybe this move here, this 100% move will move by getting into that September 19th swing point that only has 46 million shares. We really should have, you know, the day before he had 29 million, 43 million on October 24th. You would have assumed that the Qs, especially on a day like yesterday, could have approached approach that level with higher volume. Only 34 million shares, so you close inside the swing point. Maybe the top gets tested 100.56, then maybe it backs off. Like, it doesn't have to back off. Maybe it's just conserving some energy and getting ready to blast through it. That is another possibility out here. But you got the Qs and the IWM, in essence, leading the charge. That is, if you go back and you take a look at other real bull legs in a market, that's the signature out there. So you've gotten everything. And you also had what? You got the VIX index, right? The VIX index, what did that do? Yesterday it closed below the 50-day exponential moving average. We haven't seen the VIX below the 50-day exponential moving average since, sometime in September. Looks like here. Somehow my cursor is gone, so that's a bummer out there. I mean, in my crosshairs, so I can't really. Well, maybe it's on a different chart. Maybe if I do this, give me a moment to do this. Well, let's try see if it's on this chart out here. Is it on this chart? Yeah. Okay. Remember when the VIX had skyrocketed all the way back up to, major highs back in the 30, I don't have the exact number, 30, almost about the 31 level. And we're taking a look at these Bollinger Bands. That's on the upper portion of my screen out here. Man, once you get outside of that rubber band really gets stretched. Now, it can also get stretched to the downside. We're nowhere near being stretched to the downside out there, but those also help us to identify areas where the market just simply over exudes itself out there, where the fear just simply gets, I don't know if fear is really the right word, just simply the market gets stretched. And so we've seen an absolute big, huge snapback out here. So that hammer candle on October the 15th, very key level, very key signal for us inside of the markets. Now, let's go take a look at some things here. Somehow I seem to have gotten off of track here. Nah, not really getting off track. I mentioned the Dow, right? So the Dow is the one that maybe gives us the signal today. At least I thought that maybe it would give us a signal today. If we take a look at the Dow here, this is the 2-hour chart out here. If I were looking for the most bearish of patterns that I could find, and I won't say bearish, if I was looking for the, because that's absolutely an incorrect word to use. If I were looking for patterns to indicate that we could see some type of pullback out here, well, it would have to be the Dow. Why do I say that? Well, number one, the Dow made a higher high with this little doji candle out here at 6 o'clock this morning, called a high wave / doji candle. Now, what those things mean to me, what they mean up at highs, what they mean with regard to the Japanese who identify these Japanese candlesticks, is just simply a market that has lost its way. That's really what it means. And it means that very next candle session is very important, because if it's lost its way, which way is it going then? Well, that very next candle session, we saw prices move down into the 8 o'clock time frame. It's a 2-hour chart. We saw prices move just a bit lower out there, and actually enough lower to create that three-river evening star pattern. So that says you've got really good resistance up at that high, the high of that doji candle. The high of that doji candle, by the way, is, let me give you that number, it is 16,961. Looks like we're going to have to wait till we come back from the break before Stevie-san can give you more information on the Dow 2-hour chart. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 16,961 is the number there, and right now we've seen the Dow futures here trade up to a high of 16,960. So $1 away from basically avoiding this pattern that is out here. It looks to me, as I take a look at the quick intraday time chart out here. Let me see on a different. I've got just a 5-minute scale out here, so let me just take a quick peek. I don't see any reason for it to not take that out and just simply avoid that pattern. But as I was saying, as I was just simply looking around, surfing around for the different chart patterns there at 16,961 right now, you get up one more point. There you go. That's it. So that's it. So that potential pattern that might suggest some type of retracement, that's toast. That's history. Of course, there are some other patterns that could show up out there on our screen. So, I still would expect that today is going to be relatively quietish type trading until we hear from Yellen, and then the fireworks ought to begin out there. And if you are not long the market, what you want to be doing is you want to be looking to be able to buy the pullback. And the question is it going to just be a short pullback? Is it going to be a long one? That I don't know. So we just really have to watch the action inside of the market today after about 2:30, I would suspect. If we take a look at maybe some other things that are moving inside the market, we'll take a look at gold after the market opens. Let's look at a couple things that are having some trouble here this morning. Number one, I noticed here Invensense INVN is a ticker symbol. It's trading at 1675 right now. Now, 1675 is going to take out a swing point out here, or should take out a swing point from October 10th. The low there is 1766. Volume there is 3 million shares. So it's going to be taking out a swing point. I'll assume that it's going to be doing it with volume. And it's got this little high volume bar right back here that it's trading into. So this is a high volume low bar. We'll see if this can act as support. Now, the low there is 1520. The high is 1673, right about where it's trading right now. So we come back, we'll see if that area fails as support. And that should be pretty strong level of support. If that area fails as support, let me put this on a weekly time frame, see if there's anything that sticks out at us out here. This is, again, ticker symbol INVN out here. This low is 1520. That takes you back to October of 2013. So that would be the next target area where you would look for this equity to be able to find support. Facebook was out with numbers after the bell. Now they're not doing too shabby as we speak right now. I think yesterday I saw Facebook trading down to its lows, meaning its most recent lows out here. Right now it's trading at 75, 71, so it's garnering a bit of strength out here. But I do believe I saw it trading down into the lows in the aftermarket last night in the 70 type area. But right now it's trading down to about 75. Its point of control here is using our TAS market profile, 76.86. That should be a pretty decent level of support. We'll see what kind of volume comes out of this thing. You know, this has a extraordinary. Now, if you take a look at the actual breakout session inside Facebook, the real buy on this is right around that 71.33, which may be right around the area where it was trading last night. So if it can hold that level, you know, in essence, what you'd have with the gap down, you'd have basically a consolidation pattern, somewhere between the 71 level and the 80-ish type level. So we'll see how Facebook trades after it opens here for a while. Also to the downside this morning, you've got Orbital Sciences, ORB is the ticker symbol. Now, that's the entity, I believe, that was in charge of the rocket that exploded last night. Is that maybe somebody? Let me see here if it says on my news. I think they are the one, Orbital Sciences. And if we take a look at that stock chart, right now it's trading down at $25. So after that catastrophe. Now, what's interesting, $25 takes us down where? Well, the most recent swing point, it take you back really to July 31st. The high is 26.26, and the low there is 25.25. So it's trading back into that swing. If it breaks through that area, this is Orbital Sciences. Now, the interesting thing is it does have a high volume high out here way back on April 29th, but that's not going to hit that here for a while. But it does have a high volume high. That's, again, Orbital Sciences. That's from April 29th out at the 34.46 level. Nothing else really sticks out like a sore thumb or anything as I take a look at the stock chart on the way back down. So we'll see how that holds at the open, if it does hold at the open. United States Steel. X is the ticker symbol. I believe they were out with numbers. Were they out with numbers here? Yeah, their third quarter results. They generated a net income of $4.5 billion versus $4.13. Not too bad. They're being rewarded here this morning. Trade down at 41.70. Is it 41.72? 41.72 as its last trade. Jeez. 41.72. That takes us up towards those. It's going to make a run here for this high volume high. That's a United States Steel. That's right around the 46.55 level. Steve Rhodes, TFNN. I'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full custom optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Off to the races. We got the Dow up 21 points, straight out of 17,025. S&P is flat at 1985. Composite down 14 points. She's trading out at 45.49. Russell 2000 is flat this morning. DAX still up 63. FTSE up 60 points. Goldilocks back $6 right now. Silver off 2 pennies. Platinum's up $11. Leading the charge. The upside, it's Wynn Resorts up 3%, up $5 and change. Right behind it, Anadarko Petroleum up $4.85. Solar Winds, SWI now up $5.48. United States Steel up $3. Amazon up $2.86. Trade out at $2.98. Amazon You talk about hitting channel lines out there, long-term channel lines out there. Amazon has put in a bottom. It has put in a bottom until it takes out that channel line out there. You've got Newfield Exploration. That's up 11%, up $3 and change out here. Marriott, M-A-R, is the ticker symbol. I like Marriott hotels, don't you? Marriott is up a nice 3%, up a couple of bucks out there. Electronic Arts, EA, up 5%, up $2 and change. To the downside, leading the charge, Barrett Business Services, down 30%. They're just simply getting hammered out here this morning. Let me see, just simply on earnings. Panera Bread looks like they're getting the kibosh. I like Panera Bread. You like Panera Bread? I make a fairly decent, quick Greek salad. Not a great Greek salad, but it's not too shabby out there. And then to go along with that Greek salad, you could always get a what do you call those things? Bear, what are those things? Bear what? Bear something. Somebody, what is that? Bear claws. Thank you. Bear claws. Now, I don't think that is on the Nico Page diet out there, but, if you want to treat yourself, that wouldn't be too bad of a combination. Facebook's down $5, and Vincent's down $5. Well, Aspen Technologies off $4.50. Orbital Sciences down $4. Baidu off $4.40. Hershey. Hey, how can this possibly be down? Hershey's chocolate. We're coming into trick-or-treat time. We got to go take a look at this. Seems like this would be their time. Hershey's out here. I wonder, they must have a seasonal pattern out here. Let me see. What are they showing here? Adjusted net income, $234 million versus $236. That was for the third quarter out there. How about revenues? $223 versus $232. Are you folks eating less chocolate? How could you possibly do that? Let's go take a look at Hershey's anyways. HSY is the ticker symbol. Actually, I love chocolate. Hershey's is not the one that I would really go to. So, but needless to say, got a little hammer candle down here on October the 16th. That's not unusual. So far, just pulling back. Volume so far, 187,000 shares. That hammer candle had 2 million shares. Very likely that Hershey goes and tests that hammer low, 89.67. Of course, it's got to get to the hammer high at 91.45 first. So far, the intra-session trading has gotten down to only 94.64. But it looks like Hershey's on its way down to that hammer. If it takes that out, it'll head down to the swing point from August the 1st out about the 87, 88 type level. Now, it looks like in the case of Hershey's, let me pull this back a bit further, and looks like this thing has broken through its descending price channel out here. Let's just put the trend line out there, make it a little bit easier for Stevie. So we'll just take a look at the trend line. So, yeah, it broke through that trend line. This is the second time it's broken through there. Maybe it's going to come back and it's going to test that level right around the 90-70. So that would say it would get inside that hammer candle. SHY is the ticker symbol. Now, that's just out of curiosity. Let me put this on a weekly chart, right? You'd think that the candy business, their fourth quarter would be their seasonal season out here where price ought to, maybe ought to move higher, kind of like a toy business, right? So I'm just going to come back to see when the low was put in Hershey's back in 2013 out here. It was put in September, and this year it was put in July. Out here. I'm just looking at the weekly chart. Let me go back and take a look at 2012, just out of coincidence here. October 2012. Yeah, so, let me go back to 2011, just on the stock chart out here. 2011, as we look for clues. So the low was put in August of 2011, then it continued to move forward. Let me just take a look at 2010. Come on, we're spending a lot of time on chocolate this morning, but you kind of get the feel that this pattern out here inside of Hershey's, August of 2010, that, what we're seeing here is really just it beginning to form a bottom out here, bottom that ought to take the stock higher into the end of the year. So, Santa Claus is thinking about Hershey's as well out there. So maybe the buy on this is 89.10 to 91.55 out there. Well, maybe remind me, and then we can pay attention to Hershey's out here. Now let's go take a look at Goldilocks, see what gold is doing out here. Let's take a look at gold. Let's switch down to a 120-minute time frame chart out here. May take just a moment for this to populate, but what I want to show you is gold is traded back into a breakout area. Now the breakout area, once this does populate, what we're going to see here is this breakout area with a wide-ranging bar. believe. So let's take this back here. So if we're going to look for different levels of support inside of gold, we're going to come back to this breakout with volume. So big volume on that breakout session, which was on October the 15th. There was 94,000 contracts during the time frame of 8 to 10 in the morning. So far in this pullback here, and we're already an hour and 40 minutes into it, the volume to the downside is only 30,000 contracts. I don't think so. Yeah, it is not enough to break out the lows here in gold. All we're seeing is just a retracement. Now, it's going to be below the 0.382 retracement. If we go take a look at that, let me pull this back here a bit further. And if we go from the swing point low inside of Goldilocks, so we go down to the low on October the 5th, and we come all the way up to the high that was put in here on October the 21st. It's below the 0.382 retracement level. But then you got to kind of go back and take a look at the stock chart and say, well, you're below the 0.382 level. What else are you trading into? And in this case here, you're trading into what should be a fairly significant level of support out here. And thus far, it is acted that way, and that's right around that 1222-ish area. Now, you get below 1222, you get below that level of support, then that sets up moving back into perhaps a 0.618 retracement, perhaps an A to B equals CD to the downside, and perhaps this next level out here. So let's just take a look at bars, and let's go put the other patterns on the chart out here. So let's take a look at the noon time, noon to 2 on October the 8th. There's another high, wide-ranging bar out here with some pretty decent volume, not the type of volume that we saw that gold is trading into as we speak right now, but the type of volume, 42,000 contracts out there, again, versus the 30,000 that it's got here right now. So 1205, 1222 really becomes your logical levels of support for gold. But right here, right now, this is where gold ought to find its support, its footing, because it does not have the type of volume that it needs to really push through this area. Now, again, gold, in one sense, doesn't really know what to do. Bonds, in a certain extent, don't really know what to do out here. They're kind of like in this holding pattern. And first, let's go ahead and let's put together these other patterns out here, right? Let's put together the A to, oops, let me do this here. Come on. Let's put together the A to B equals CD pattern to the downside. Come on, work with me, would you? Work with me. My system is a bit slow this morning. Too many things running in the background, I suppose. That's a bummer. It's a real bummer. Oh, now what? It heard me talking to it, and so it went ahead, and I must have deleted the tool out there. Well, let's just leave it like this. At this stage here, 1222 is the area to be watching inside of Goldilocks. But I guess my point really that I was trying to make out here is if you were to look at the stock chart, and let's go put this on the daily time frame out here, what you're going to see is a series of small-bodied candles. Now, what is it that we know about gold out here? What we know about gold is it's already on the intraday chart. It's begin forming its A to B equals CD patterns to the upside. What do we know about gold on a daily chart out here? I said 1222 was the number to be looking at. Well, you've got your TAS market profile low at 1218, so that becomes a pretty good area of support. Gold is in the process here of making a to B equals CD to the upside. If we take a look at that A to B equals CD, let me try to repopulate with the new one, because we're seeing just a little bit lower low here this morning. Your A point is going to be that October 6th low. This is the second A to B equals CD pattern, but this is going to be right up here on October the 21st, going to be your B point. Your C point is going to be down here on October 29th. Now, at 4:30 this afternoon, I'm going to be doing a free workshop for eSignal subscribers, but we've got it arranged so that you, even if you're not an eSignal subscriber, you can attend that workshop live. Just go to the homepage at TFNN.com. In the breaking news area, I think it's the second line item down. It says free workshop with Steve Rhodes. If you click on that, that'll take you to the eSignal workshop sign-up page. It'll take you just a matter of moments to go ahead and sign up. Then you can get access to that from 4:30 to 5:30 today. I'm going to give you an extraordinary overview of the A to B equals CD pattern. Always pearls of wisdom that I pass on to you that you can actually use, the very next moment when you're off of the workshop out there, that you can go ahead and apply on your stock charts out there. So go ahead and sign up for that, and join me this afternoon at 4:30. Would love to see you there. Now, I think we only have standing room only. Attendance, as I got some emails late yesterday, said attendance is off the charts out here. So go ahead and join us. Let's keep ramping it up. Let's show those folks at eSignal the type of support that we want to give to that group. So, of course, how could it really be standing room only? Of course, baseball. Are we now at 3-3? Are we going to a Game 7 in the World Series? How much? It doesn't get too much better than that, does it? And so actually, as long as you've got a chair, you can sit down and you can watch the workshop tonight. So 1293, 1312 is where Goldilocks is headed to. And now the reason I say that, got a number of small-bodied candles here over the course of the last 3-4 trading sessions. So it's like somebody's keeping their thumb on it. Who the heck could that somebody be? Best I can assume it's these large commercial traders that have ramped up their less net short positions. I've shown that chart. I'm not going to switch over and do that right now, but I've shown that chart, and I can tell you that the big money basically is expecting that somehow, whether that's this afternoon or it's tomorrow, the big money's expecting to see the U.S. dollar index get croaked, Goldilocks take off to the moon or Mars or some planet out there. Commodities, just in general, just simply take off the moon because they're all measured in dollars out here. And so we'll see how that plays out. That, of course, says the euro should move higher as well. So let's go take a look at one of my clients has sent me an email late last night. I didn't get a chance to get to it. I believe he listens in on the show. So let's go take a look at it right now. He wanted to take a look at taking a long position in FXE. Because of my comments out here about the euro and the mere fact that it's now trying to form on a daily basis. It's next A to B, it's second A to B, it's larger A to B equals CD to the upside, which would take it into the 130 level, and he is considering playing the FXE. So you got a direct correlation between the two. The problem is, if there is a problem, is that if you're going to trade the unlike the euro, look, I can't control these markets. I can't tell you what they are absolutely going to do out here. The only way we can do that is we can come take a look at stock chart patterns out here, identify the areas to go ahead and put your stops in place, do the proper money management strategy. And the problem with the FXE, but many people don't trade the currency pairs. In the currency pair, you can have your stop in place. And so that means what 2, 3, 4 in the morning, whenever it starts trading out there, big time in London, if the move goes against you, you're stopped out and you've been able to protect your risk out there. If you're going to trade the FXE, just as an example out here, let's go take a look at the FXE. Let me switch over to this spot right here, FXE. So we can see how the Dow is up, and it failed at that one potential significant reversal pattern, and that failed. Man, this market has got legs, does it not? If we take a look at the FXE out here, the problem that you've got is that you're only really trading this thing between 9:30 and 4 o'clock in the afternoon. But he is absolutely right in his contention about the A to B equals CD pattern that you would form out here. That would be similar to what we have on the euro, with the A point being down here. Where'd my cursor go? I'm going to come back and I'll have to get those prices for you. They'll be put on here. But the A point in the FXE is down at 123.22. The B point is 127.01, and the C point is down at 124.46. So that says that this has a price projection of about 128.25, 129.28. Let me do this here. Let me actually help somebody. Let me help this client set up the potential trade on this. Let me see if I can do this. Let me pull this back here. Let me go to my position size calculator, right? The whole key to trading and investing is in position sizing. So we're going to let's say you entered right now. It's trading at 125.55. Just going to write these numbers down on a pad of paper here. Of course, it would really be helpful if I had a pen that was full of ink. So they're going to say 125.55, and then we're going to use as our targets either 128.25, or 129.28 out there. So let's go take a look at how this trade would set up. Now, position size is the whole key to trading. You see, you don't really need to risk more than 1% of your trading capital out there. Now, FXE, and if you've never subscribed to Mastering Probability, go do that right now. You can test drive that for 30 days, unconditional money-back guarantee, and you get access to my 90-minute money management workshop out there, and that's the key. And you'll also get access to the use of this calculator. Now, this is really a index-type ETF. It's following the currency pair. In this case here, we're looking at going long. So we got the FXE. I know what their average true range is, which means on the average daily volatility of this is 61 cents. So we get back. Let's go finish off this trade here. Let's go identify what the trade could. Steve Rhodes, TFNN. Hope you're right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back folks. Hey, let's go back to that FXE trade out here. We were trying to identify the position size. It's really all about position sizing out here. So if that's a concept that's new to you, it's one that you absolutely want to wrap your head around. Now, in this case here, we're taking a look at the FXE. This is the position size calculator that all of my clients get access to. It's included on their members page out here. Now, we're down to the section where you would input your trading capital. Now, I'll just put this in chunks of I'll just use $10,000. That way, if you're trading a $100,000 account, just multiply the numbers by 10, and you're all set. Now, in this case here, we're only going to risk 1% of our capital. That means we're only going to risk $100. Now, our estimated entry price on this, I believe it was around $125.55. That's if you were to buy it right now where it's trading at. And our reward, let's use the 1 to 1.2728 to be equal C to the upside. 129.28 would be our reward. So let's see if this is worth it for us to go take a trade in the FXE. Now, number one, this tells you you'd have about close to a 4-to-1 reward to a risk trade. It would say your stop would need to be below 124, your hard stop, 124.56. I mean, you would put that in as a one cancels other, meaning you would go ahead, you would put the trade in now. You would have a top bracket, which is your target, at the 129.28. Is that what I used here? 129.28, or maybe a penny or two below that. You would use as your stop 124.56. I do want to see where is 124.46 is that swing point down there. I want to get my cursor back here, make it a little bit easier for me to actually navigate around there. There we go. Okay, so you've got your stop at 124.56. I would actually set my stop below 124.46, so I'd go ahead and make an adjustment since we're so close to that swing point out there. It still gives you about a 3-to-1 reward to risk, but in this case here, you only need to really risk maybe about 0.25% on this trade out here. So you need to raise because you just simply have too much of your portfolio allocated to this trade out here. So in this case here, we'll just come back. We'll just adjust that to risk to 0.25. I'll come back to my calculations out here. And what you're looking at is about 25 shares for every $10,000. And that's how you would put on the trade if you were interested in going long the FXE. Again, remember, when you're trading these currency ETFs out here, the problem is that your stops are good, but it's not as good as actually trading the underlying currency pair out there. And that's really my recommendation, would be to trade the underlying currency pair. You just simply have much better money management techniques out here. Because in this case here, picture this. The euro could go ahead and hit its target and then back off from there. So you have picked out the target in the case of the euro, but because the FXE isn't trading overnight, you have missed out on, you may have gotten the entire trade right, yet missed out on all of the burger, all of the steak, all of the hard work, because you're just dealing with a ETF that's trading between, in essence, U.S. Stock trading hours. So my real recommendation is that if you do want to trade currency pairs, trade the currency pair. Absolutely trade the currency pair out there. That would be the safest and best and most reliable way to do that. Hey, let's go back over, take a look at a couple things while we've got about another 30 seconds out here. Let's go take a look at some things here let's go look at Facebook. So Facebook's only down $4, so not too shabby out here. Facebook, let's see what kind of volume we have inside of Facebook. Now, it's trading below its point of control out here. Volume is pretty good, 39 million shares out here. You would expect that Facebook would at least take a ride on the reading, and that would mean get down and at least test this little gap, this little junior sign of strength from October 17th out here. Now, it's tested the top of it, which is at $76, 76 million shares there, but you're moving into that with 79 million. If you're looking for a long entry in Facebook, see if it'll come back in about that 71.33 level. Well, folks, it is Wonderful Wednesday. Hey, don't forget, get over to the homepage at TFNN.com. Under Breaking News, free workshop with Steve Rhodes. It's tonight at 4:30. I look forward to seeing you there. Have a great day, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.